Imagine this, you're sitting on your couch, scrolling through your phone after a long day at work. You see a notification, it's a DM or a sleek-looking ad. It's someone, maybe a friend from high school or a polished influencer, showing off a brokerage account that just went from $500 to $50,000 in 3 weeks. You look at your own savings account, it's sitting there, earning 0.01% interest, basically losing value to inflation every single second. You think, man, I'm working 40 hours a week just to break even, and this guy found the cheat code. Maybe I'm just being too cautious, maybe this is my turn. That feeling? That little spark of hope mixed with a heavy dose of FOMO? That is exactly where every great financial scam begins. My name is Mike, and I spend way too much time thinking about how the financial world is engineered to separate you from your hard-earned money. If you're someone who is tired of feeling like you're falling behind while everyone else seems to be getting rich quick, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Look, here's the thing, we like to think we're too smart to be scammed. We think scams are for grandmas who don't know how to use a password, but today's financial scams aren't just Nigerian princes anymore. They are sophisticated, they use psychological triggers, and they often look exactly like legitimate investments. Today, we're breaking down the 5 biggest financial scams out there right now. We're going to look at the math, the psychology, and most importantly, how you can spot them before your investment turns into a $0 balance. Number 1, the pig butchering scam, the long game. This is the fastest growing scam in the world right now, and the name is as brutal as the method. It's called pig butchering because the scammers fatten up the victim before they go in for the kill. It starts with a wrong number, text or a LinkedIn request. They don't ask for money on day one. Instead, they build a relationship. They talk about their life, their wealthy uncle, and their passive income. They play on your need for connection and your desire for financial freedom. Let's say you start small, you invest $1,000 into a platform they recommend. It looks like a real trading site. Asterisk week 1, your $1,000 shows a 20% gain, you're at $1,200. Asterisk week 2, you withdraw $200 just to see if it's real. The scammer lets you take it. Now, your brain is flooded with dopamine, you think, it works. I actually got my money out. This is the fattening phase. You then deposit $20,000, your entire emergency fund, because you've proven the system works. Then, suddenly, the site is under maintenance, or they demand a 30% tax fee before you can withdraw. Here's what most people don't realize, that $200 you withdrew. That wasn't profit. That was just a portion of your own $1,000 being fed back to you to build trust. According to the FBI, Americans lost over $3 billion to investment fraud like this last year alone. How to avoid it? If someone you've never met in person starts talking about a guaranteed crypto or forex platform, block them. Real brokers don't reach out via WhatsApp. No to the influencer pump and dump. Now, you might be thinking, Mike, I'm not talking to strangers on WhatsApp, I only follow verified people on social media. Well, look, this is where it gets really interesting. This is the scam that's hidden in plain sight. An influencer with a huge following starts posting about a tiny company or a new utility token. They tell you they've done the research. They show you the moon emojis. Let's calculate. The influencer buys the asset at 10 cents, they then tell their 1 million followers to buy. As thousands of people rush in, the price jumps to $2. The influencer then sells, or dumps, their entire position. Asterisk influencer profit. If they bought 100,000 shares at 10 cents and sold at $2, they just cleared $190,000 in profit. Asterisk your result, as soon as they sell, the price crashes back to 5 cents because there's no actual value behind the asset. You just lost 50% to 90% of your money. It's authority bias, we trust people who look successful. We think, They're rich, so they must know what they're doing. But here's the truth, often, their wealth isn't from the investments they're pitching you, it's from the fees they get paid to pitch them, or the dump they're about to execute on you. Action step: never buy an asset just because someone on a screen told you to. If they can't explain the cash flow, the P/E ratio, or the actual business model, it's not an investment, it's a gamble where the house, the influencer, always wins. Number 3. The ghost debt collection. This one is more aggressive and relies on pure, unadulterated fear. You get a call or a legal notice via email stating that you have an unpaid debt from 5 years ago. They have your social security number and your old address. They threaten you with immediate arrest or a lawsuit if you don't pay a settlement of $1,500 right now. Scammers buy lead lists from the dark web for pennies. If they call 1,000 people and just 1% gets scared enough to pay, that's $15,000 in a single day. It's the amygdala hijack. When someone threatens your freedom or your credit score, the logical part of your brain shuts down. You stop thinking about whether the debt is real and start thinking about how to make the threat go away. How to avoid it. Legitimate debt collectors are required by law to send you a written validation notice. Step 1, ask for their professional license number. Step 2, tell them you will only communicate via mail. Step 3, check your credit report on a site like annualcreditreport.com, if it's not there, it's likely a ghost. Number 4. High-yield, private, real estate deals. We all know real estate is the gold standard of wealth building, scammers know this too. You see an ad for a private real estate investment trust, promising a guaranteed 15 to 20% annual return, backed by hard assets. They'll show you photos of luxury apartment complexes. Let's calculate. The average historical return of the S&P 500 is about 10%, the average return for legitimate commercial real estate is usually 6% to 12%. If someone is guaranteeing 20%, you have to ask, why do they need your $5,000? If I had a business model that could guarantee 20% returns, I wouldn't be running Facebook ads to find small investors. I would go to a bank or a hedge fund and borrow billions at 7% interest, keeping the 13% spread for myself. The insight. This is often a Ponzi scheme in a suit. They use the money from new investor B to pay the guaranteed returns to old investor A. It works perfectly, right up until they run out of new investors, then the whole thing vanishes. How to avoid it? If an investment isn't registered with the SEC, you are flying without a parachute. Always check the SEC's EDGAR database. If they aren't there, walk away. Number 5. The job offer, overpayment scam. In a world where everyone wants to work from home, this one is particularly cruel because it targets people who are actually trying to work. In reality, you apply for a remote data entry or personal assistant job, you get the job after a quick text-based interview. They send you a check for $5,000 to buy your home office equipment. A day after you deposit the check, they say, oops, we sent too much, our vendor only needs $3,000, please wire the extra $2,000 back to our supplier. You see the $5,000 in your bank app, so you send the $2,000. Let's see. Banks are required by law to make funds available quickly, usually within 1 to 2 days, but clearing a check can take weeks. Day 3, you wire the $2,000. Day 10, the bank realizes the $5,000 check was a fake. Then, they take the $5,000 back out of your account, you are now negative $2,000, and that money you wired is gone forever. No legitimate employer will ever send you a check and ask you to send money back to them or a vendor. Period. The big picture, why we fall for it. Look, I get it, the economy is tough. Housing is expensive, we're all looking for a way to get ahead. But we have to understand the price of admission. Wealth building is supposed to be boring, it's supposed to be slow. When you try to bypass the time requirement of building wealth, you aren't finding a shortcut, you're walking into a trap. The common thread in all 5 of these scams is the promise of asymmetric returns. They promise you high reward with zero risk. In the real world, those two things are physically impossible to separate. Action plan. If you want to protect yourself starting today, follow the 3-day rule. Asterisk never commit to a financial decision on the first day you hear about it. Asterisk research the person or company on independent forums. Asterisk talk to a real person, a spouse, a friend, or a fiduciary, about the deal. Scammers rely on isolation. Sunlight is the best disinfectant. The best way to build wealth isn't through a secret crypto coin or a guaranteed 20% return, it's through consistent investing in proven assets, increasing your earning potential, and, most importantly, keeping what you already have. Stop looking for the cheat code and start mastering the game. If this video opened your eyes to some of the traps out there, do me a favor, share this with one friend. You might just save them from a life-altering financial mistake. Would you like me to do a deep dive into how to vet private investment opportunities so you can tell the real ones from the fakes? Let me know in the comments below. I'm Mike, and I'll see you in the next one.